Hi guys, it's Stock Curry, and I am extremely tired right now. It's very, very late. This is probably the latest I've ever uploaded a video. My eyes are literally red right now. I'm trying to get this video up before the pre-market opens, so hopefully this gets up in time. We'll see how long it takes to edit and upload. But I want to talk to you guys today about what happened Wednesday in the markets. Obviously, it was a complete bloodbath. A lot of people lost a lot of money, including myself. I'll tell you right now, this day, Wednesday, was literally one of the worst days I have ever had in the stock market, ever. My portfolio as a whole was down 15% today. Like one day, down 15%. By far, one of the worst days I've ever had in the market. And I'll explain why. We're just going to knock out some market news real fast because a lot of you guys contacted me and asked me to cover the stock market as a whole in today's video. So that's what I'm going to do before we get to the stock picks. So here's what happened. As a long-term investor, buy stocks, hold them. I don't care how far down they go. I'm just going to hold them because I'm going to tell you something right now. I can almost guarantee you that within 7 to 8 months, every single stock is going to be back to all-time highs. Like, I don't care if that stock's down 40%, 50%, they're all going back to all-time highs within 7 to 8 months. I can almost guarantee you that. So is the long-term stuff I'm just holding. Now, on paper, I'm losing a ton of money because they just keep going down and down and down and down. But that's okay. I'm just holding. I'm selling them. I'm not going to lose money on those unless I sell them. I'm not selling. So the problem, though, for me was the short-term portfolio. And this is where a lot of people got killed. No matter what kind of swing trader you're doing, the swing trading always works the same way. So some people will try to find trend lines that are going up and they're looking for a bounce like this. And they're going to buy at the bounce and then they're going to ride it up. Some people do horizontal lines and they're just looking for bounces like this. And when it hits this, they're going to ride that back up. And then some people, like the traveling trader, use the EMAs. And when it bounces off of an EMA, they typically the 21 day, they will buy it at that point and ride it back up. Today, every single stock broke every single line of support. It didn't matter if you were looking at trend lines, it broke through. It didn't matter if you were looking at horizontal lines, it broke through. It didn't matter if you were looking at EMAs, it broke through. Every single level of support broke on Wednesday. And that is why so many people, including myself, StockMo, and many others, said that today was one of the worst days ever in the stock market for them. And believe me, we have been trading for a long, long time. All three of us, traveling traders, StockMo, myself, like all of us have been trading for over a decade. And today was one of the worst days ever. So I just want to let you know, if you're losing money, you're not alone. A lot of people are losing money. Now, market overall, here's the good news. I got good news for you guys. I really, really do. Yes, I know tomorrow looks like it's going to be another down day in the market. I don't know what is actually going to happen pre-market, but the futures right now are down about 1%. So it looks like it's going to be another bad day, but we'll see. Who knows? I mean, I thought today would be up and it was way down. But market overall, keep in mind a market correction is 10% to 20% down. Now, the S&P 500 and the NASDAQ, I'm not looking at the Dow too much because those are more of your larger blue chip companies that a lot of people are jumping into for defensive plays right now. But I'm looking at the S&P and the NASDAQ. The NASDAQ right now is down over 8%. The S&P is down over 3%. And they are both about to hit some really important support levels on their EMAs. The NASDAQ actually, I see about another 2.5% drop on that. S&P about another 3.5% drop. So when it's all said and done, the NASDAQ might be down about 11%. S&P might be down around 7%. And there's a very, very good chance that that's the bottom. Now, how long will that take? Well, historically, when we have these down days in March, they actually finish off around March 11th, which would be 1 week from today. I think that's next Wednesday, if I'm remembering correctly. So it looks like this market correction might be over in about 5 more trading days. Around Wednesday of next week could be the bottom for this market correction. That's if the NASDAQ drops another 2.5%, and if the S&P 500 drops another 3% within the next week, then we could be looking at a bottom 5 days from now. So that's the good news. The good news is we are seeing signs that a bottom is very, very, very near. The other thing that I see as a sign that the bottom is very, very near is a lot of you guys are panicking. You're not just panicking, you're actually getting angry. Like, I'm getting little orange, angry emojis like, how dare you talk about the stock market? Urgh. Well, guys, I love it. I love seeing stuff like that. It gets me super excited because that tells me that all of the panic from new investors means we are near the bottom. When everybody is super static and they think stocks are just going to go to the moon and stocks only go up and all this stuff, right? He's got stocks that are up 900% and you think it's going to go up another 3,000% in the next week. That kind of static hype, I get really scared and I know a market correction is coming. I mean, I saw this market correction from a mile away. I was telling you guys back in January and February to start loading up on cash and getting into defensive stocks because I saw this market correction coming. It was so obvious. There was so much hype. It had to correct. Now, everybody's got the exact opposite. Everybody's panicking. They're selling out. There's people that said they're never going to trade again. I'm seeing all kinds of stuff. And this is the kind of panic. When everybody's panicking, that's when you know the bottom is near and we're about to go up. So, personally, I think we got one more week, okay? One more week on the market correction. That's my prediction. My prediction is that Wednesday, March 11th, somewhere within there, within a day or two of that, we will be bottoming out. So I think we're going to get a bottom next week, and then we're going to start going back up. The real critical thing here is if the markets overall drop below their EMAs, then they're going to go down to the next level. And at that point, we could exceed correction territory and get into bear market territory. Now, a lot of YouTubers have said, no, there's no way we're going into a bear market. Impossible. It'll never happen. We just had a market crash last year. We never have bull runs that are this short and all this other stuff. I'm going to tell you right now, the market is acting significantly faster than it's ever acted before. The market crash that we had last year lasted 1 month, okay? Prior to that, market crashes lasted between 9 months and 1 year and 6 months. We have never, ever, ever had a market crash that fast in just 1 month, okay? It's never happened before. So I have seen the market reacting and having corrections and crashes and bull runs much, much, much faster than I've ever seen before in my life. And I think a lot of that has to do with the huge amount of retail investors that are coming into the market. So because of that, I am ignoring everybody that says, well, historically, we've never had a bull run that was this short, so therefore we can't have a market crash right now. I don't believe it, okay? I have seen the market is acting much, much, much faster than it ever has before. And I think having a, what would be 11-month bull run or 10-month bull run, however it's long, it's possible that that's all we get. Now we get a market crash. I don't list that as a very high possibility, especially since we have stimulus bill that's going to be passed this week. But it is a possibility, a small possibility. Maybe like at this point, I'll give it a 10% chance that we get a full-on market crash. But there's a 90% chance this is all over next week. So just keep that in mind. I will be taking another closer look at this next week to see if we actually do rebound or if we keep going down. But for now, I think there's a 90% chance it's all over next week. All right, guys. That is my market update for you guys. There is a light at the end of the tunnel, and it's looking good. Now, for those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. I then compile all of my analysis into a daily video that I post right here on this channel. I spend hours every day watching YouTube videos so that you don't have to. All you have to do is watch one video each day and you will get every single stock pick from the top 10 YouTubers. And all I ask in return is that you click that like button, subscribe, click the bell icon, and click all so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Alright, before we get to today's stock picks, I just want to remind everyone that I'm not a financial advisor, and none of the YouTubers I analyze are financial advisors either. This video is purely for entertainment purposes only. For those of you who are wondering, you are looking at the Webull desktop app right now. I use Webull for trading, and I also use Webull in all of my videos. Okay, let's get to today's stock picks. First up is AAL. This is American Airlines. ZipTrader listed AAL as his favorite airline stock to gain the most once things reopen and get back to normal. ZipTrader listed this as a stock that could double. Next up is CCIV. This is a SPAC and they're merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. Stockmo said that he had one of his worst days ever in the stock market because of CCIV. So I'm not the only one who had one of their worst days ever on Wednesday. We're all in the same boat. Just stay positive. If you like CCIV as a long-term investment, this is extremely cheap right now. By the way, the fair value of CCIV, assuming zero future growth, is $15. So the question now is, how much is future growth worth? Personally, I think CCIV should be at $40 right now. We just need to get through this market correction and it should start going up quite a bit. Now in the short term, I do see this dropping down to the 100-day EMA at around $21. So if you're thinking about buying CCIV, I would wait just a little bit longer and you should be able to get in at a slightly lower price. Next up is CCL. This is Carnival Cruise Lines, and ZipTrader mentioned CCL today and gave it a $50 price target. This is a pandemic recovery play that should go up as things reopen. Personally, I think Norwegian Cruise Line Holdings, ticker symbol NCLH, would be a better buy. The reason is because last year, CCL ended up selling half of their company to the Saudis, and that literally cut the value of CCL in half. So technically, if CCL were to get back to half of its all-time high, it would only get to $36.35. And at that price, NCLH has more upside potential than CCL does. Next up is CLOV. This is Clover Health. This is a Medicare Advantage provider. This is a stock that I own in my long-term portfolio that unfortunately has not been performing very well lately. But this stock is so cheap right now that I actually purchased it for my short-term portfolio also. This stock is heavily shorted and is way undervalued right now. ZipTrader said CLOV should perform well once the storm is past. Next up is CRON. This is Kronos Group and this is an MMJ stock. Wednesday, before the market opened, the traveling trader listed 10 stocks that he thought were good to buy right now. But as you're going to see in this video, most of his stock picks broke below support and dropped pretty significantly. And the first one that we're going to talk about today is CRON. This broke below the 50-day EMA today, and the next level of support is now the 100-day EMA, which is currently at $9.26. So if you're interested in CRON, I would wait for it to drop a little bit more before buying. Next up is CTRM. This is Castor Maritime, and they are a commercial shipping company. Smart Trader showed us that CTRM is just dropping with the market right now. He said under $1, this is in a buy zone, but support is down at 77 cents. Now I do see three levels of support on CTRM. One is at 75 cents, the next is at 63 cents, and the next is at 55 cents. So Smart Trader and I both see CTRM dropping more, but once this market correction is over, this would be a great stock to buy for a long-term hold. Next up is DKNG. This is DraftKings and they're an online sports betting company. Chris Zane and StockMo mentioned DKNG as stocks that they are holding for diversification in their portfolios. DKNG has been performing quite well during this market correction. If you buy it at the 21-day EMA, then I think that is a good price to buy in at. The 21-day EMA closed Wednesday at $61.16. Next up is GS. This is Goldman Sachs. StockMo said GS is a good stock to buy to protect your portfolio during inflation. Banking stocks will continue to go up as inflation goes up. I will let you know that GS is one of the stocks that I bought to hold during this market correction. Next up is HOL. This is a SPAC and they're merging with Astra, which is an orbital space launch company. This is another SPAC that has been absolutely clobbered during this market correction. It closed Wednesday at $12.95, which is down nearly 50% from its high. It's currently at the 100-day EMA. ZipTrader said he thinks HOL will double once this market correction is over, and I agree. Next up is ICLN. This is a clean energy ETF, and the traveling trader mentioned ICLN before the market opened this morning, saying that it would make a good stock to buy now because it was at the 100-day EMA. But like so many stocks that I looked at today, this broke below support and is now on a free fall down to the 200-day EMA. The 200-day EMA is currently at $21.93, so this stock could still drop another 10% before it gets down to the next level of support. In the long term, though, clean energy stocks should do well with Democrats controlling the country right now. Next up is IPOD. IPOD and IPOF have no merger targets yet, but Zip Trader reminded everyone about these SPACs today. He said that these are good deals right now at their current prices. I agree, especially since they are at their 200-day EMAs. Next up is IPOE. This is a SPAC, and they're merging with SoFi, which is an online fintech startup. The traveling trader mentioned this before the market opened on Wednesday and said it was at the 50-day EMA. Well, here we are at the close on Wednesday, and now this is very close to its 100-day EMA, which is currently at $16.54. That could be a level of support if it holds, but seeing how quickly it crashed through the 50-day EMA and kept on dropping, I wouldn't hold my breath. In the long term, though, this stock is very cheap right now. Next up is JMIA. This is JMIA, and they're an African e-commerce company similar to Amazon. Zip Trader listed JMIA as another stock that could double once the market correction is over. We are very close to the 100-day EMA, so hopefully this will hold that line and not drop any further. Next up is JPM, which is JP Morgan. StockMo mentioned JPM in addition to GS as good banking stocks to buy now. To understand why banking stocks are good stocks to buy now and why they will continue to go up no matter how low the overall market goes, you need to understand what is happening with the Fed right now. The Fed is starting to get worried about inflation. Inflation occurs when the federal government prints too much money. And in the past 12 months, if you include the current stimulus bill that is about to get passed, the Fed will have printed about the same amount of currency that was outstanding prior to the start of the pandemic. Prior to the start of the pandemic, there was about $12 trillion of U.S. currency in circulation. So far, the Fed has printed $9 trillion, and the current stimulus bill will add another $3 trillion, bringing the total to $12 trillion. So in the past 12 months, if you include the current stimulus bill, the amount of U.S. currency in circulation will have doubled from $12 trillion to $24 trillion. So what does that mean for inflation? Well, the price of everything could double over the next 12 months if the Fed doesn't step in and do something. That fast food meal you're currently paying $10 for will cost you $20 a year from now. Gasoline that you're paying $2 a gallon for will cost you $4 a gallon. Your rent will double. The price of houses will double. Everything will double in price. So the Fed is trying to step in to stop hyperinflation, and one way they can do that is by raising interest rates. Well, when interest rates go up, that means banks, who provide loans, will now make a lot more money because they are getting a higher interest rate. And interest rates can get pretty high. Right now, mortgage rates are averaging 3%. In 1981, mortgage rates exceeded 18%. That is 6 times higher than where they are right now. So theoretically, if the Fed raised interest rates that high, the banks could be making 600% more than they are making right now. So that is why banking stocks are such great investments right now, and why you might want to consider going overweight on banking stocks in your long-term portfolio. Also, I wanted to let you know that Zip Trader explained what the Fed is doing right now more literally than how I just explained it. So if you want more information on what the Fed is doing, I would recommend you watch Zip Trader's video that he uploaded Wednesday night. Next up is MP. This is the only rare earth mining company in North America. The traveling trader let us know that MP made new all-time highs today. The traveling trader remains very bullish on MP because rare earth metals are used in semiconductors and EV batteries, both of which there is a worldwide shortage on right now. The traveling trader gave a $100 year-end price target, and I personally think this would make a great long-term hold. Next up is MVIS. This is Microvision. This company produces LiDAR and heads-up displays for autonomous driving vehicles. Smart Trader gave a long-term price target of $50. He said he thinks the current price is too high, but did say that anything under $15 would be a buy zone. I do see very strong support at $14, but if the market correction continues through the end of March, MVIS could drop down to around $10. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. NIO is now well below the 100-day moving average. A lot of people, including myself, never thought NIO would drop this low. Now, I did say that I was waiting for NIO to drop below $40, and I still am. I'm not sure where the bottom will be on NIO, but right now we do have support levels at $35 and $38. So I think it will be somewhere in there. The traveling trader said this is a great opportunity to buy NIO for a long-term hold, and I agree. Stockmo also said that he now sees support at between $39 and $40. So no matter who you ask, NIO is getting very close to a bottom at these prices. Smart Trader also said that NIO is an absolute steal at these prices, and Smart Trader gave a bottom at $38. Smart Trader also said that NIO will jump right back up to $60 after this market correction is over, and I agree. Next up is NNDM. This is Nano Dimension, and they're a 3D computer chip printer manufacturer. The traveling trader thought this would find support at the 100-day EMA, but like so many stocks I watched today, this broke through the 100-day EMA and is now in free fall down to the 200-day EMA. We have a couple of levels of support between $6.74 and $7.70. But no matter what, NNDM now looks like it will fall another 12 to 23% before hopefully finding a bottom. I have gotten stopped out of NNDM 3 times now. I know this is getting frustrated for you and testing your patience. Believe me, I'm right there with you. The good news is that when retail investors start to feel worn down and hopeless, that usually means that the bottom is near. Now, Richard Allen also uploaded a video Wednesday evening going over an article saying that NNDM would drop below $7. The article was complete crap, but if you're interested in Richard Allen's analysis of the article, you can watch the video he uploaded Wednesday evening. Next up is NVDA. This is NVIDIA. Stockmo said NVDA is a good stock to own due to the global chips shortage. I will let you know that NVDA is one of the stocks I hold in my long-term portfolio. Next up is OCGN. This is OCGN, and Keen and Grace mentioned OCGN today after they announced good Phase 3 trial results. The next step for OCGN will be FDA approval. That said, Keen and Grace said he will not be buying OCGN until it drops below $9. Next up is PLTR. This is Palantir, and they're a data analytics company. The traveling trader posted a video Wednesday morning before the market opened and said he thought that PLTR would hold support at the 100-day EMA. Now, unlike most of the stocks that I was watching today, PLTR actually did hold the 100-day EMA on Wednesday. Now, part of the reason is probably because this is getting pushed fairly heavily on Wall Street bets. If we do get further downward pressure in the market overall, and I think we will, then I would not be surprised to see PLTR drop down to the 200-day EMA, which is currently at $19.12. But for now, it's holding the 100-day EMA. So if you decide to buy PLTR, I would set a tight stop loss at about 2 or 3% below your purchase price. Now, ZipTrader also mentioned PLTR after the market closed on Wednesday and said that he thinks PLTR could double. I agree. It probably will once this market correction is over. Next up is RKT. This is Rocket Companies. They're a fintech company that holds a wide range of financial companies, including mortgages, auto loans, and personal loans. Trace Trades mentioned RKT on Wednesday, but keep in mind that he mentioned it before the market opened when it was still at $41.60. He drew a support level at $28.18 on his chart, and sure enough, that's where RKT finished today. He did stress that this was a short-term swing trade for him, and that he only planned to hold for 1 or 2 days. He said he would sell if it dropped below $38, and obviously it did today, so I do not think Trace Trades still owns RKT. That said, he did show that most of the people who were shorting RKT did not cover RKT on Tuesday, and it looks like RKT is in the same boat that GME was, where the number of shares owned, also known as the float, exceeds the number of shares outstanding. Now, personally, I think that while Tuesday was a feeler for a short squeeze, there is still another chance at a GME type short squeeze if bulls can keep the price going up. In addition to that, Trace Trades talked about the market manipulation that is going on with RKT right now, but that market manipulation won't continue if retail investors can take over and push the price up. Now there are two ways you can play this. One is to buy the stock, another is to buy call options. Just be very careful with options because you can quickly lose your entire investment. Next up is SENS. This is Senseonics, and they're an implantable blood sugar glucose monitoring manufacturer. Smart Trader said this could go up to $15 by the end of this year. This is a stock that I hold in my long-term portfolio, but in the short term, I see SENS dropping down to the 50-day EMA, which closed Wednesday at $2.71. Worst case scenario, SENS could drop down to the 100-day EMA, which closed Wednesday at $1.91. Again, I hold this in my long-term portfolio and I am not selling. Next up is TRXC. This is Transinterix, and they're a medical device company. They make robots for surgery. We haven't talked about this company in a long time, but Dead Inside mentioned it today because they just received FDA approval. The stock was up 15% on Wednesday on the FDA approval news. Now everything on the stock is starting to turn bullish, so I really like this as either a swing trade or a long-term investment. If you want details on this company and Dead Inside's analysis, I highly recommend you watch Dead Inside's video that he uploaded on Wednesday. Keenan Grace also mentioned it and showed us that this stock was at an $80 share price at one point. So there is a lot of upside potential on TRXC, especially since they still have 2 more FDA approvals in the works. Next up is TSLA. This is Tesla, and they're an American EV manufacturer. Chris Zane said that TSLA is a stock that you're going to want to buy after this market correction is over. Don't buy it as a short-term play, but as a long-term play, this is a good price. Keenan Grace also said that TSLA is in a buy zone right now at $650. Now I'm going to reiterate what I said before. TSLA is at very strong support right now, but if it drops below the support level, and it probably will on Thursday, then the low is somewhere between $465 and $520. So personally, I would wait until after this market correction is over before buying TSLA. Next up is TSM. This is TSMC, and they're a semiconductor company. The traveling trader said this would be a good stock to buy now since it's at the 50-day moving average. And it's a semiconductor company, which should do well given the fact that we have a global semiconductor shortage right now. Now, during any other market conditions, I would agree 100%. But in the past 2 days, I've just seen too many stocks break below support and just keep on dropping. So I would be careful about buying this just because it's at support. If you want to buy TSM, make sure you set a tight stop loss at about 2 or 3% below your buy-in price. Next up is TTCF. This is Tattooed Chef, and they're a plant-based foods company and a competitor to Beyond Meat. Chris Zane has been saying for a while now that he likes TTCF below $20. It will probably get there on Thursday. We do have support at the 200-day EMA at $19.25, so I agree that any price under $20 is a good buy-in price. And if you can get this at $19.50, that would be ideal. I would set a stop loss at $19 on TTCF. Next up is UWMC. This is UWM Holdings Corp, and they're a wholesale mortgage company. The traveling trader really likes this because it's trading below its SPAC price of $10. I will also let you know that this has been pumped on Wall Street Bets pretty heavily on Wednesday. Now it doesn't have very high short interest, so don't expect a short squeeze with this one, but it would make a great long-term hold, especially at any price below $10. Next up is VALE. This is VALE, and they're a metal mining company in Brazil. They mine precious metals along with other minerals. This stock has been performing very well over the past few weeks, and the traveling trader thinks this would make a great long-term hold. Finally, we have WPF. This is a SPAC, and it really doesn't matter who they're merging with. Richard Allen mentioned WPF today because it dropped below $10. Now, this is really important for you to understand, so please listen carefully. Most SPACs have a $10 redemption value. What that means is that at any time you can call your broker and sell your SPAC shares for $10. So anytime a SPAC drops below $10, you are literally guaranteed to make money on your investments. WPF dropped as low as $9.93 on Wednesday before closing at $9.96. So one strategy you might want to implement right now if you are tired of losing money and want guaranteed profits is to go on SPACinsider.com and look through the SPACs on that website and find some that are trading below $10 and buy them. By the way, I have a link to SPACinsider.com as well as quite a few other free websites in the description of this video under resources.
Now just keep in mind that while most SPACs have a redemption value of $10, not all do. Some have a redemption value slightly below $10, although $9.50 is pretty much the lowest you'll find. One example is CFII, that's Charlie Foxtrot India India, and that SPAC is also currently trading near its redemption value.
Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock picks are. And if you want to get some free stocks, sign up for Webull using my link in the description below. When you sign up, they're going to give you 2 free stocks worth up to $1,850. They're also going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.